Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the euro currency. So very thrilling situation right now on the euro, and it's difficult for analysis as we talked about in our weekly report. Still, despite the recent pullback as we see on a daily chart, I think that we still could hold with our trading plan, because I would prefer to see the workout of the bearish context first before changing my mind and taking the bullish side on the market, because previously in last week we saw many moments where at the first glance the bulls takes the control over the market. For example, at the end of the previous week here, market has formed a bullish grabber, some intraday strong levels have been broken, and it will seem that market behaves irrational from the bearish point of view. But later some event has happened on the market, particularly in these moments was a big rally on the interest rate yields on the United States bonds, and dollar has got the support and market collapsed. So also we need to keep in mind actually existence of the bearish weekly patterns, that here and here and here we have the bearish grabbers on the weekly chart, and although they let market fluctuate rather wide range, but still they are still valid, and they suggest the taking out of these lows. That's why currently I do not see any signs of breaking of the bearish context despite this pullback that we see here, and I think that we could stand with our trading plan that we have prepared in the weekly report. By this plan we suggest the downward action probably should continue. Currently we again stand in a very difficult situation because we again depend on the strong fundamental event that will be the Fed meeting, and tomorrow will be announced on interest rate. But what's more important is the perspective should be announced, the perspective of the United States economy, and that's again the risk factor for the whole market, and euro is not an exception. That's why everything could change, but currently I don't see any reasons to change our scenario, change our trading plan. What we've got yesterday we see the pullback here. Market has formed minor bearish grabber, as the MACD predictor has been touched, but market has closed below it, and this pattern suggests the taking out of these lows. Market right now is turning down, and we're still watching for this ABCD target 1235 as the nearest daily target, although potentially ultimately this could be the butterfly, as we have talked about in the weekly report, with the targets below these lows, and potentially we're actually waiting for 1185. That's the major weekly fib support in the nearest perspective. What we have from the 4-hour time frame chart. On the 4-hour time frame chart, take a look. Market forms very harmonic retracements. On last bullish, let's call it as a bullish reversal, right? So it was on the previous week. When the market has broken through the confidence, it has made the same upside retracement. So you can see this market keeps this upside retracement pretty nice. This was again has completed yesterday and last week. Here is also harmonic swings. Here is again the same retracement. I would suggest that here we have also approximately the same retracement here. And on the 4-hour time frame chart we have incompleted OP target at 1257. Usually markets very rare abandon important targets and turns before it will hit it. Next destination point 1218 is potentially butterfly that approximately agrees with the daily OP target. So here I would suggest that it's just a retracement and downside action really could happen. What we have on the hourly chart, very similar price action compared to the previous one. Here market actually has reached our predefined level where we have intention to go short. It's confidence resistance retesting of this trend line, so fluctuations around this area. And take a look, actually market hits here and here. It was the 50% fib level of the whole previous action. Here again, it stands above the confluence. Here, if you remember, it was also slightly above the confluence. But again, it hits the 50% of the whole downward action. And what will happen next? It suggests by this overall construction that we suggest that it should be probably downward continuation. Because take a look, every time when the market shows the downward action, it takes the very fast sell-off. Here to the OP target retracement, downside continuation. That was, guys, just the 117 extension of this butterfly. If you remember, we have talked about this in a weekly report. So we have actually a butterfly here. Reaction on the butterflies. 117 has been hit, pullback. Now the 1618 stands at 1250 again, coincides with the follow time frame target. And also, guys, this is XOP of the same ABCD pattern. So currently, as you see, I would not have any reasons to change our mind. And everything stands as we have planned. Market hits the important resistance. Here, by our suggestion, market theoretically should reestablish downward action. If something will be broken, the market will accelerate higher. Well, in this case, we will take the pause and see what will happen. But I suggest that this rally to the upside could happen mostly only as a reaction on the Fed comments. Currently, there's some factors that could trigger this upward action. In general, on the daily chart, guys, actually, the short-term bearish context will be broken only if market will pass through the confluence resistance or taken out of this top. If this will happen, yes, we could say that probably market indeed is changing direction to the upside in the medium-term perspective. Upward action could continue, but while market stands below this lows, below this confluence, it could fluctuate in wide range here, but the context still will be bearish. And it means that in the current circumstance, in the current point, it's too early to think about the bullish reversal and chance on downward action here. Market still holds these chances. So let's see what we will get.